Yeah, good morning, everyone. So yesterday we saw a positive move on the in the US side, driven by some positive indications from the Fed with various Fed. But key thing is that the inflation figure are due today, and a lot more will depend on the outcome of the Fed, uh, the how the inflation come out today evening. So need to be watchful of that. But anyhow, dollar index came off by almost around 35 basis point, and that has supported most of the market. And also the Asian market also, because most of the Asian markets are positive today. Hong Kong is closed, but rest other market are indicating positive trend. Oil has also come off by around $0.5. Copper is seeing some uh, extra move, and today morning is up by almost around 2%. But iron ore and steel are a bit soft. They are coming off. Iron ore is down by around 1.5%. Uh, Overall, what we see that the positive sentiment of Asia market can keep the Indian market opening also positive and can sustain in initial part, but there is high probability that we may see some profit booking at a higher level. So need to be watchful in today's trade. We may see some volatility in today's trade. I'll request technical team to take up from here.
Thank you, sir. Very good morning, all of you. Talking about Nifty, Nifty has shown a good bounce back rally in yesterday's trading session where Nifty opened on a good note and closed on a higher note. If we talk about Nifty's daily chart, it has formed a good double bottom formation by taking the support of its 100-day moving average, which is placed at around 22,000 levels. The major thing we have to watch here is 50-day and 20-day moving average, which has coincided into each other, and that is the very important resistance zone that is around 22,300 levels. We have seen profit booking from these levels prior to that, but this is the level we have to watch for. If Nifty crosses 22,300 on the closing basis, then we can expect a higher rise towards 22,400 levels. Whereas the downside support lies at 22,150 and 22,000 levels. Talking about Bank Nifty has shown a good move in yesterday's trading session, again taking a support of its 100-day moving average, and it has moved past that. For Bank Nifty, the immediate resistance is its 20-day moving average, which is at around 48,300 levels. If that is crossed, then 48,440 to 48,700 levels can also be seen in Bank Nifty. Whereas the support lies at its 50-day moving average, which Nifty had taken support yesterday also at around 47,800 levels. That is going to be an important support zone for Bank Nifty. Talking about financial Nifty, it closed around 21,370 levels. The upside resistance lies at 21,420 to 21,500 levels, whereas the downside lies at 21,300 and 22,220. Talking about stocks, Balakrishna Industry is looking good at current levels. We have initiated buy call for this. Can be bought for a target of 2570 by keeping a strict stop loss of 2440. And second stock we are liking here is SWS Solar. we had initiated the buy call on this. It was locked on an upper circuit in yesterday's trading session, and we feel target of 746 can be achieved in this stock also. So that's all from my side. I request Nirav to take the call forward.
Thank you, Ayush. On the derivative front, as I said yesterday as well, more or less Nifty should remain in range now, with the higher band being around 20 to 300, 20 to 350 for the spot. We are opening positive today with the GIFT Nifty up. There is likely to be some resistance that can come in around 20 to 300, 350 levels, and this is where we can witness some selling pressure. So anything that you've bought in the last 3 4 days, you can look to book profits around this zone for from the index point of view. Stock specific, you will see momentum in select stocks. 22,000 now becomes a strong support area for Nifty on the downside. The open interest PCR are inching up, and but still at comfortable levels. The VIX is still about 20. It is likely to move up above that 25 to 30 level. So there can be slight bouts of selling pressure still coming in the next few days. So look out for the same. You know, keeping some cash and booking some profits would be good for at this point of time with the data that is available at this point of time. So yeah, keep trading and keep booking profits. That should be the mantra for the next 15-20 days. From the stock specific front, nothing much to add here. We have seen, broad-based buying in the last couple of days. Only thing is the banks haven't seen much buying, and some sort of short covering action can come in the banks. And for the same, do look out that these banks will do well in the one or two trading sessions. So the banks like ICICI, HDFC, IndusInd Bank, uh, these stocks can pretty much do well, but the PSUs as well, Bank of Baroda, SBI, and some of the PSUs which were hammered, like Canara Bank as well, can do well because there are a lot of shorts in the system for these banks, and some short covering action can come in. So yeah, look out for the same. So that's it from my side. Like to ask the fundamental team to take over, please.
Good morning. Repco Home Finance result is marginally above expectation due to write back of provisions. However, if we look at the loan growth, which was management has been guiding since 3 years, every year at the start of the year they guide for loan growth reaching lower double digits by the end of the year because Q4 is the strongest, but it has not happened this year as well. Loan growth was 2.5% sequentially and 8.5% year on year. NIM declined slightly. As a result, profit before provisioning was marginally down quarter on quarter. However, because of negative provisions, profit came slightly ahead of estimates. Although stock looks cheap at just one-time book, but don't expect any sustained outperformance. One would be better off with faster growing housing finance companies. Something like India Shelter Finance makes sense. Today, one IPO is opening in terms of filling the IPO. So Go Digit in General Insurance IPO will be opening today, closing on 17th May. We have given neutral rating. Issue price is 272. Market cap would be around 25,000 crores post listing. Total issue size is 2,600 crores, comprising of 1,100 crore of fresh issue and 1,500 crore of OFS. It was incorporated in 2016, and GoDigit is a digital full stack non-life insurance company. Despite being a digital company, it's not just a broker like Policybazaar, but it manufactures its own insurance, just like ICICI Lombard, for example. The only difference with other general insurance companies is that GoDigit focuses on integrating higher degree of technology in its operations. In terms of product mix, motor insurance is 60% mix of gross written premium, Health insurance is 15%, and property and engineering is around 10% mix. And there are smaller other products like travel and marine insurance as well. In terms of positive, in a short span of 7 years, the company has captured market share of 6% in the motor insurance segment, which is the largest non-life segment in India. However, profitability has been subpar with ROE of just 5% for the 9-month period, compared to an average of between 16 to 17% for peers like ICICI Lombard and Star Health. Also, combined ratio is much higher at 109% compared to peers at around 101%. And Go Digit's valuations also is at a slight premium at 7.6 times trailing price to book, and 2.8 times market cap to gross written premium, which is a slight premium to average of private peers. And thus we have suggested that a neutral rating on Go Digit's IPO. One IPO will be listing today. We had already discussed it last week, Aadhar Housing Finance, where we had given subscribe rating. Issue price is 315 and stock is expected to list at premium of between 10 to 20%. Market cap will be 13,000 crores. Aadhar's business is identical to other listed companies like Home First, Aavas and India Shelter. It is the largest housing finance company in the low income housing segment, which is ticket size of less than 15 lakhs. Total AUM size is 20,000 crores and average ticket size is 10 lakhs. 57% of loan book is from salaried borrowers and 43% from self-employed. On most parameters of NIM, cost to income, credit cost, ROA, ROE, the metrics are very similar to other listed companies. However, one thing where Aadhar is lagging is the loan growth. We've observed that in the past, whenever housing finance companies cross the 15,000 crore loan book, then the growth profile starts coming down. Similar thing has happened in Aadhar as well. So last 3 odd years, loan CAGR is at just 16-17% compared to between 25 to 30% for other listed companies. So that's why we feel that Aadhar should trade at a slight discount to listed companies. And accordingly, it is coming at 2.6 times price to book. We think it has scope to list at around 3.1 times. And then it will languish and earnings growth will be in the region of 15 to 20% then on. Okay, that's it from my side. Thank you.
Good morning. Bajaj Electricals Limited posted the results below expectations. Revenue degrew by 20% on a YY basis. During the quarter, consumer product segment witnessed a steep decline in revenue, where the appliances segment witnessed a decline. However, it has seen growth in single digits for fans, and Morphy Richards achieved high single digit growth. Lighting segment posted flat growth. EBITDA margin reported at 4.2% versus the expectation of 6.6%. In the con call yesterday, the management highlighted about growth in consumer lighting, improvement in logistic cost and operating leverage in consumer products, which are the key areas where they will be focusing on. However, near-term risk of lower consumer demand may have adverse impact on the company's operations. Thus, we remain neutral on the stock. Colgate-Palmolive result was above expectations. Revenue grew by 10% on a YY basis, and EBITDA margin reported at 35.7%. Versus expectation of 34.3%. The stock is trading at a PE of 49.5 times to FY26 EPS and will provide the outlook post con call. Patanjali Foods Limited result was okay. Revenue and in terms of operating profits, it has seen positive performance where it has grown on sequential as well as YOY basis. EBITDA margin stood at 4.5% versus 4.1% in the same quarter last year. The company has continued to see increase in its share of food and FMCG in total revenue from 6.8% in FY22 to 19.49% in FY23, and now it is stood at 0.06% in FY24. The stock is trading at a PE of 63 times to TTM EPS. Asian Chemical Industries posted the results below expectations. Revenue degrew by 25.8% on a YY basis. EBITDA margin reported at 30.7% versus the expectation of 35.1%. We'll provide the detailed explanation post the con call for both Asian Chemical and Patanjali Foods. Thank you.
Yeah, good morning. Today, one more IPO is getting listed, that is of TBO Tech Limited. Last week, we discussed the company. It is a leading B2B travel distribution. It has a platform in the global travel and tourism sector. It operates almost in more than 100 countries. The issue size was 1551 crore. And we had given a subscribe rating to the IPO, citing good growth expected in the overall global tourism industry. The price was between 875 and 920 for the stock. On the results front, Bharti Airtel reported its numbers in the evening yesterday, and the result was marginally below expectations. The average revenue per user, that is ARPU, came at rupees 209 versus the expectation of 211. Last quarter it was 208, and a year ago it was 193. So revenues and margins overall got marginally impacted, basically on account of devaluation of the Nigerian currency. Long-term outlook remains positive for Bharti Airtel, since most of the telecom players are expected to take tariff hikes post-elections. Also, Bharti Hexacom reported its numbers yesterday. The result has improved. ARPU came at rupees 204. Last quarter it was 200 rupees, and a year ago it was 189. So revenues on a sequential basis were up around 4%. Even the margins were around 47. EBITDA margin was at around 47%, or flattish. Outlook for the company remains positive for the long term. Thank you.
Yeah, apart from this, Devyani International reported yesterday numbers, and numbers were okay. The key thing is these numbers were including the acquisition of KFC brand in Thailand, and which has added around 284 stores in their total count. That is of KFC. And considering that part of business got added in revenue and profitability. In Thailand, the profitability of the KFC is comparatively lower. They are doing around 12% EBITDA margin over there. But what the management has indicated that though the margins are lower, but the volumes are much higher in Thailand, and that will compensate the lower margin. Apart from that, what we had seen that company is driving multiple growth strategy. One is definitely acquisition of the KFC in Thailand. Apart from that, company is also looking at expansion in food court segment, where the company will be having multiple brands of their own and also outside brand in mall. So food court will be managed by the company, and where the company will have few of their brand and few of the other brands. So that is a new business which company will be pursuing. Already company is doing this type of business in few of the malls in eastern part of the country. Apart from that, company had also tied up with PVR for the setup of in dining in theaters and all for their other brands. Earlier, they were having tie-up for only Costa Coffee, but now the tie-up will be for all the brands. So company will be setting up their stores into the multiplexes, and which will drive the growth. Apart from that, KFC is anyhow doing very well. Only troubling point is Pizza Hut, which is consistently seeing pressure on the pressure and decline in their performance. And the company is looking to change some strategy and try to revive that. Another thing which is likely to drive the growth for the company is Costa Coffee, which was very small earlier, and now in the last year they expanded substantially, and the process will continue in the coming period, and that is giving good results for the company in Costa Coffee because the market has been is getting vacated by CCD, and which is being now captured by Costa Coffee. So that is also acting as a positive trigger for the company. So overall seems outlook is positive for the company from a long-term perspective. Short-term, we may see the poor demand which was there in the recent past can continue for some more time. But looking at the coming seasons of say Diwali and all, where the real demand come up, we may see some revival in the urban demand, which can drive the overall growth for Devyani International. So outlook for Devyani International looks quite positive from a long-term perspective at current price. Then apart from that, another company which has reported result is BASF. So BASF has reported good improvement in their performance, and there is enough scope for the performance to further improve. If we considered their operating margin, that has just it's at around 7% for this quarter, and there is enough room for the company to expand that. So we had seen last 1 or 2 quarters that the margin has started improving. And if this continue, then there is enough scope for the margin to improve. We had seen that one of their competitors, that is Clariant Chemical, in the European market has filed for bankruptcy. So there is a possibility that BASF can benefit from that. And anyhow, revival in the chemical business can support BASF business. So outlook seems positive for BASF from a near-term and long-term perspective. Then Apollo Tyre came up with the numbers, and numbers were below expectations. So like all other tire company, we had seen bit pressure, though the gross margin remained more of a flattish or improved marginally. But what we had seen that the operating margin had seen bit lower tick. What we see that the rubber prices has moved up in the recent past, and that will likely to have a further impact on the gross margins, and which can have some impact in the near term. Also, what we are seeing that the OEM sales of CV is likely to remain flattish year on year in the current year. And also passenger vehicle is likely to increase by 5 to 6%. So this will also have a lower growth from the OEM side, though replacements growth need to be seen, though Q1 is likely to remain a bit soft. So outlook for the near term is a bit soft for the Apollo Tyre. Then Siemens come up with very strong numbers. Here the margin has seen good improvement, and also the revenue has come marginally ahead, but operating margin came in at 15.3% versus expectation of 12.2%. Last quarter 12.4%, and last year 12.8%. So substantial increase in EBITDA margin, which is indicating that the positive result is there. And apart from that, the order booking remain, new order booking remain consistent. Company has booked 5,200 crores of order book in the quarter, against last quarter 6,000, and last year 5,400 crore. Company had said that few of the order has got deferred to the next quarter. So marginal lower order booking is not a concern. So valuation seems a bit costlier at 73 times FY26 earning, but overall result was good. Another company, that is Shree Cement, has come up with strong numbers. The volume was also very strong, and EBITDA per ton has also improved. The the volume came in at 9.53 million ton versus expectation of around 9 million ton. And last quarter 8.89 and last year 8.83. And that has also driven the overall result for the company also. EBITDA per ton has come at 1,393 versus expectation of 1,230. Last quarter it was 1,388 and last year it was 1,000 rupees. So overall results of the Shree Cement is strong and valuations are at around 16 times EV by EBITDA, bit costlier premium to Ultratech. But Shree Cement always command better valuation as compared to its peer. So that's all from me. I'll request commodity team to take up from here.
Yes, sir. Thank you very much. Good morning, everyone. In gold, we are expecting prices to test 70 to 600 to 700 on the upside. So buying on dips around 70 to 250 to 200 is recommended. One can maintain a stop loss of 72,000. Silver also, we are expecting prices to test um, 86,000 to 86,300 on the upside. So buying on dips around 85, 200 to 100 is recommended and maintain a stop loss of 84,600. Copper prices have opened gapped up and one should wait for a dip and enter again. So buying around 892 91 is recommended and on upside again it can test 900. So zinc also one should buy around 265.50 and maintain a stop loss of 264. Aluminum also one can enter long. We are expecting prices to test 237 238 on the upside. So buying around 234 is recommended with a stop loss of 232. Crude oil prices are consolidating from 6,500 to 66.50. So trading within this range is recommended. However, prices are supportive at 6,500. So one can buy with a stop loss of 64.70. In natural gas, we might see some cool off till 190, 190, 188 levels. So for trading purpose, one can strictly sell with a stop loss of 201 and prices should remain under pressure as long as it is below 197. So that's it from us. Thank you very much.